Okay, let's get into the nitty-gritty a little bit. A temperature check, if you will, on individual countries and regions. Here is more from Pierre-Olivier Gourinchas, the chief economist at the IMF. This is what he had to say.
Well, first, it's been quite resilient. So it's 3.3% last year, 3.2 this year, 3.2 next year. So it's been very resilient. We are seeing some changes when we look across different regions and groups, however. So, for instance, among advanced economies, we have an upgrade to the U.S., which has been doing better than expected, and in part this is the strength of domestic demand. There is also the increase in labor supply coming from immigration, and that has helped support activity. But a downgrade for many European economies, especially those that are more dependent on manufacturing. So manufacturing activity has been weak among advanced economies, and so countries like Germany, and a country like Italy have been downgraded. Now, when you look at emerging market economies, there again, the number has not changed. It's about 4.2%, but there is some change among the different regions. As I'm sure we'll discuss, China has been downgraded somewhat compared to our July forecast to 4.8%. And we have some upgrades in some other emerging market economies, like, for instance, Brazil. And going forward, going to next year, we can continue to see divergent trajectories between some emerging markets. So, for instance, China is expected to grow at 4.5% next year, less than 4.8 this year. India is also expected to slow down a bit from 7 to 6.5, but other regions are expected to recover. In particular, regions are affected by conflict right now, by climate shocks. So in the Middle East or in sub-Saharan Africa, we are expecting to see some rebound in growth going forward. So the number looks stable. It's the global economy, of course. It's not everyone is marching at the same tune, and we're seeing different regions on different trajectories.